we'll get more reaction for you then. Lullu Krugel, PwC chief economist, in joining us for this one. Lulu, that was unsurprising, surely. That it was probably the most ripe circumstances for a cut in interest rates.
Yeah, I think if we look at, as you mentioned just now in your conversation, interest rates or inflation coming in just below the middle point of the target band next year. We are expecting the outlook to tick, or inflation over the next year to tick up slightly, but still within that target range very comfortably, and in fact remaining under the midpoint. However, and I think that is the challenge that we are sitting with, where we typically see these cyclical matters, so inflation, for example, interest rates, typical cyclical issues in the global economy, where we can say with a reasonable level of certainty where that would go. At the moment, with all the uncertainty globally in things that are actually longer-term policy decisions that can upset that, and that makes it difficult to actually look further than the next month or 2 months. But as you said, definitely not a surprise. I was one of the few that was hoping, knowing that the Reserve Bank would probably go for 25 basis points, that they might decide to go 50 this round and then hold. But they've taken the cautious approach. And it was interesting that there were 2 members of the MPC that were actually thinking that the Reserve Bank should hold off from that 25 bips cut this time around.
Yeah, very interesting notion. So we had the Federal Reserve out in the United States decide to actually hold interest rates yesterday and keep them unchanged in their assessment of things. Do you think that this became South Africa's last chance, or the Reserve Bank's last chance to actually cut interest rates? I'm only asking this question because now things could ultimately change. Donald Trump's rhetoric around changing tariffs, etc., and how that might impact inflation, as the governor has spoken about, is absolutely critical. And that could ultimately change the way the world sees inflation at this point in time. Our own very same issues with regards to petrol and electricity could actually head a little bit higher as well. So should they have gone for 50 basis points in this one? Because it may have been the last chance and they would have had to remain or stay pat for quite a few months after this.
Well, I think let's for a moment, I won't say ignore, but put the discussions about trade a little bit to the side. I think if you think about where we were and where we're heading, there was still room for the SARB to cut interest rates, and there is still room, in my opinion, by another 25 basis points in March. They moved slower than the Fed. There were times in the past couple of months where bigger moves by the Fed. A lot of economists were looking at the Reserve Bank and saying, but why did you not follow suit? So that has left them with a little bit more room. And even if you look at what other central banks globally have been doing, we have subspace, and the governor used the words almost at a neutral position. So moving closer to a neutral position. So what he alluded to is, well, we'll see how things develop, but as it stands now, I think there's a fairly good chance that we might see another 25 basis points in March.
So
however,
no, please continue.
They did allude to looking at that trade war scenario, and what was interesting for me is a 25% or 25 basis point increase in inflation in the repo rate, inflation going to 5%. It is not a crazy impact, even under that scenario. So yes, we can see inflation ticking higher, but that is an outside risk, and it might take a couple of months to actually materialize. It just depends how the rest of the world reacts to what Trump is doing at the moment. So I wouldn't say the last chance as yet. I think another 25 bips in March is possible. I would have liked to see 50. Similarly, for the reasons that you are saying, and maybe because I would have hoped that it would be a bit more of a stimulus for the economy if we did that in one go.
Yeah. Are you what did you make of the tariff situation or the tariff scenario that was pointed out then or painted out by the Reserve Bank? I mean, if you get just an increase of around 10% in those tariffs, it of course would increase inflation at least to that 5% mark, but you'd have a 13% weakness then in the local currency to around 21 Rand against the US dollar from where it sits right now, around 18.53 odd. What did you make of that?
Yeah, so I'm glad to see that they actually decided to look at that. I'm not surprised. Very happy that they decided to look at that. And I'm also really happy to find that they've shared that results, because it's discussions that economists have been having over the last couple of days to say what would the implications of that be? How widespread would the inflationary pressures from that be? And I was one of those that said, if something like that happens, and the big thing is retaliation. So the tariffs on its own, that 10% tariff increase, would not necessarily result in those types of results. If there's retaliation from the likes of China, from the likes of Canada, Mexico, other countries that are being impacted by that, in a similar fashion or maybe even more extreme, that's when we see the kind of scenario that they looked at. So it's a trade war scenario, not necessarily a tariff scenario like what we're seeing at the moment. So how and in what way other countries retaliate, and whether or not this is just a measure for President Trump to say, I want to talk, I want to negotiate, and it's a way of forcing himself into those talks and negotiations, that we'll have to see. That's what happened last time around when they increased tariffs.
Lulu, if we bring it back home and we bring it to South Africa, really, it's ultimately good news for the consumer, is it not?
It is. I mean, my hope would have been that the global situation would be such that we can increase or decrease rates even further. And I know that the Monetary Policy Committee has the view, and you could say rightfully so, given their mandate, that they should keep inflation in check and not stimulate the economy. But I think it could have been a good short-term stimulus. Those longer-term things that the governor spoke about are still the things that we need to sort out in the economy, but it definitely is good news for the consumers. And cumulatively, we will end up, I think, at least with a percentage point or 100 basis points reduction in interest rates in this cycle.
Lullu Krugel, Chief Economist at PwC. Thank you so much for the time this afternoon. Then, of course, following on from that decision by the South African Reserve Bank to cut interest rates by 25 basis points, ultimately a lot more of your debts will be a little bit cheaper than for you as of tomorrow in order to pay back, whether it be your car, your household, depending, of course, on the rates that you currently have. For your savings on the other side, then, it just means, unfortunately, that they will then mean a little bit less. You may take home a little bit less when it comes to a few more of those savings or deposits that you have put forward to the bank.